Hi everyone, today I'm going to talk about how you can make money from investing no matter what. Before I actually start, I would like to talk about some of the literature out there that say that we should never invest in stocks. And those are: first, you should invest in real estate instead of stocks. Second and third, we have limited information and capital compared to those institutional investors, so we are bound to lose. Fourth, time and efforts are taken away when you have too much focus investing, so you should focus on more your salary rather than paying attention to investing. All of these arguments are valid to some extent. But what if we just tweak a little bit of our angle and think a little bit in a different way? So the first argument, let's have a look. I've just graphed S&P index from 1996 to 2019, and S&P's compounded annual growth rate from 1996 to 2019 was about 6%. On the other hand, US housing price from 1996 to 2019, pretty much the same period, was about 4%. So stocks are usually more volatile, but growth has been similar or even higher than housing prices. And here is a list of reasons that you should invest in stocks instead of housing. First, you can buy any stocks with small amounts of money. So there are a lot of penny stocks out there, and with even $1, you can buy stocks. Whereas if you want to buy a house, you need to have hefty loans for real estate. And this creates a huge amount of negative cash flow that will eat away your assets. This I have talked about in my previous video, so I don't need to emphasize again. Third, stocks have better liquidity, meaning that it is easier to sell stocks than to sell house. And lastly, stocks have usually lower tax rate than the housing, although it is true that some countries have different tax regulations, but in general, stocks are traded much more frequently and have lower tax, making it much more desirable investment than real estate. So I've just looked into comparison between real estate and stock investment. And as we can see, stock is much more desirable and convenient. Now let's look into the second and third argument, which say that we can't compete against large institutional investors. They have a better information, have a larger capital to invest, and thus individual investors are bound to lose. I would like to use an analogy, which is David and Goliath in the Bible. So a lot of people say that institution and fund managers are Goliath, and individual investors are David. It makes sense because David is a small boy, whereas Goliath is like a huge person. Contrary to expectation, however, the story actually ends with surprising David's victory. And Malcolm Gladwell explains how David won in his David and Goliath book. Basically, he says that David was able to defeat Goliath because he did not fight one versus one in the way Goliath wanted, but rather used his weakness as his strength. So how did David fight? David did not follow Goliath's request for a traditional one versus one fight, but used his swiftness and tools to win. So he was very small compared to Goliath, and thus, therefore, he was able to move very swiftly. And again, he had his slingshot, which was very useful against heavily armored Goliath. The strategy David used was that he never engaged one versus one fight, but rather he ran around, tried to spot his weakness, and used long-range attack with his gun slingshot. And Goliath was not able to respond to his tactic because he was heavily armed and thus very immobile. David used his underdog strategy to win what seemed like a lost battle. And let's take this analogy and use it to stock market. Now I'm going to list out David's advantage against Goliath in the stock market. First is time horizon. David can invest a very long time, whereas Goliath cannot, because Goliath is subject to compliance, and thus there is a limit as to how long Goliath wants to hold the stocks and what stocks Goliath can buy. Whereas David is free from all these restrictions, and he can buy whatever stock he wants and hold on to them as long as he wants. And lastly, there's no pressure for good performance. So Goliath usually has to issue their financial and performance reports every quarter. And this puts pressure on Goliath because he needs to think about short-term gains. But David is free from all these performances and he can endure loss and invest long. So using all these advantages of David against Goliath, let's come up with David's strategies in stock market. First is no short-term trading. only long-term trade. And David should not leverage or take out loans to invest in stocks. There's no technical analysis in trading. And study for transformation of industry and changes and invest in best company in that growing industry. And lastly, forget about investments for 5 to 10 years after making investments. So what's the rationale behind all these? First, with leverage and loans, people cannot withstand when prices drop. Stocks is all about psychology. And you know that in the long run, stocks will go up in price. But when it drops in the short term, it's very hard to bear in mind. And especially with leverage and loans, you will never be able to withstand when prices drop. And second is short-term trading with technical analysis cannot beat Goliath. So you remember that David played against Goliath's advantageous rules, and he played on his own. And short-term trading with technical analysis, exactly what Goliath is good at. So you should never play with it. And lastly, long-term investments eliminate the need for information and large capital because Goliath cannot do this. And in the long term, company-specific information and the amount of capital you can invest in loses its importance. Furthermore, let me explain what I mean by studying transformation of industry. And by transformation, I mean economic, cultural, and industrial macro trends that are affecting us everywhere. And these are inevitable mega trends that no single company can resist. So basically, we need to do top-down approach to look for a developing country, developing industry, and the best company within that industry. To do this, you need to study and be aware of what is going on in the world. Let me give you an example of this strategy. I have read a book on the gig economy. And what is this gig economy? A gig economy is a free market system in which temporary positions are common and organization contract with independent workers for short term. So basically, it's explaining about the transformation going through the world now, where companies are more and more hiring temporary positions rather than permanent positions because of the cutting costs and a lot of labor flexibilities. And I also believe that the future workforce will be much more freelance-like and it will affect every economy and company. Then my next question would be, how can this knowledge be used for investment? So I tried to look for one of the platforms where contract workers are hired to work for companies, and Salesforce just came into my eyes. And Salesforce is the world's #1 customer relationship management platform. And it also provides freelance worker platform. And I personally use this system when I did freelance work, so I know that it's quite effective and very convenient to use. And what happened actually to Salesforce stock price? And as you can see, it has pretty much more than doubled in the last 2 to 3 years. Are there any other mega trends that are going on now? Let me just give you a few ideas that I think are quite significant. First is the rise of e-commerce. We all know that online shopping malls and market is growing, whereas offline market is growing smaller and smaller every day. And I've written an article about this phenomena in my blog, so please refer to my blog for further more information. Second is electronic vehicle and hydrocarbon vehicles. Automobile industries are also undergoing profound transformation, and it will depend less and less on fuel fossils to fuel its vehicles. And it will gradually be replaced by either electronic or hydrocarbon fueled vehicles. Third is a rise of sharing economy. I mean, we all know Uber, Lyft, Airbnb, those sharing economy that have already taken roots in everyday life of us. Fourth is expanding Chinese consumer market. Trump's tariff on Chinese commodities and goods may have dampened sentiment a little bit, but actually Chinese consumer market is growing very rapidly. And the last but not the least, there's also artificial intelligence, as represented by AlphaGo and a lot of tech companies in the United States. So if you just take one of these examples and look into the industry and pick out good companies that are growing really fast, there's no way you are going to lose money. Furthermore, if you cannot bother to find a company, let's say if you're just too lazy to do search on company, then there is a financial product called ETF. ETF stands for Exchange Traded Funds, and it's basically, in simple terms, the same as buying all companies in one industry. So for example, there are industry classification from finance, healthcare, consumer discretionary, and so forth. And if you buy exchange traded funds for finance, then you're basically buying all the stocks for banks and financial institutions. Thus, this automatically diversifies individual company risk and you're only left with industry. And this is very convenient for those investors who want to only invest in the industry and does not want to bear any company-specific risk. So here is a recap of David's strategy in the stock market against Goliath. Basically, short-term trading is what Goliath wants, as they have more information and larger capital base, which are critical for short-term gains, and thus, it makes sense for us to go for long-term trading. And David needs to study growing industry and either buy ETF or best company in the growing industry and hold it for a long time. But of course, to do so, you need to always study and have an insight into understanding of finance, economy, and industries. So we've just looked into the second and third points, which are pretty much saying that individual investors cannot win against institutional and large fund managers. But now we know that David can also win against Goliath by using David's strategies. Let's look at the last point, which was pretty much saying that we should use our valuable time and youth to increase our salary rather than look for investment income. Well, I partially agree with this argument because our youth is very precious time. But in the end, investment needs experience. And you only need $10 in stock investment. And with stocks in investment, you will definitely have some attention and time to study. And this study and experience will accumulate over a long period of time. And say that all you have done financially is you put your salary into deposits until 40s. You won't be able to start investing easily because you simply don't have the right experience and habit of investing. People should invest early in the youth not because they want to earn investment income, but rather want to accumulate financial knowledge and experience in investing so that later they can invest better. So we have looked into the strategies of David in stock market against Goliath. And by using this strategy and not buying a car, you can definitely build assets that Rich Dad talked about, a secret to becoming rich. And to sum up, I think stock investment is not a gamble at all. And if you don't invest in stock markets in this capitalistic society, it's the same as saying I don't want to become rich. An investment basically offers the only way, apart from starting a business, to become rich and eventually be free from lifelong labor. So I have talked about how we can build wealth by investing in stocks and should not buy a car when we are young. Next time, I would like to talk about why we still need college and why college degrees still matter when a lot of people say that they don't need it. And please subscribe to my channel and like my video if you had enjoyed it.